It's nearing the end of the financial year. How do we set challenging but realistic targets for the year ahead that our teams will buy into? Let's focus on a simple thing that we can do that pays off many times over in terms of understanding the metric we might be dealing with. And that is to look at the historical trend. Probably 3 years as a minimum, perhaps more if you have it. And then you just plot this number on a simple line graph over the whole time period. And we call this a time series graph, as you can see. Just this simple step of visualizing the data makes a difference straight away. First obvious thing you'll see from this is you get three really big peaks, and then you get the troughs in between. You can see they're repeating across different years. So we've got the same in 21, 22, and 23. You can see upward trends obviously leading to the peak, and then downward trends, and whether they're repeated at roughly the same time. You won't see this in a large table of numbers which represents exactly the same data, and you won't see it on a classic year-end report. We might only have actuals, targets, and if you're lucky you'll have prior year figures as well. Let's look at some commonalities between years, and it's really obvious in this diagram. These peaks occur in October time and then starts to trail away. But you can imagine if you were a standard retailer, this might be shifted slightly, peaking in November, December, and there's run up to Christmas. You can see this is happening every year, and we call this a seasonal effect. Similarly, there's a drop off right down to the bottom, which is quite often what you can expect in retail. So you're getting that every year in this data as well. There's another way you can do it, which is to plot a single year and a different line for each of the years. You can see we now get 3 lines appear, and the timeline is just January to December. And it makes the comparison of year on year much easier, and you can start to see the differences that I'm talking about. The shapes are roughly the same, but there's a difference, and specifically you've got March 23, where the peak is much higher, where you see something that's quite different and not repeated. It's well worth looking into. Something that's happened in the UK over the last few years is we've had extra bank holidays thrown in, and that might be a boost for your company, or it might be a trough. So you have to make a judgment on whether you think that's likely to happen the following year, or is that just a one-off. The other thing you can see, we've got a fairly high number there, but if you had an outlier, perhaps something in the first half of the year that was notching up on the 320, you would see that distinctly as a weird data point, which could be down to error in the figures. And you'd want to look into that and decide whether you want to keep that in or whether you want to flatten it off or remove it somehow. So you can look back at this past data and it gives you something to deal with. And it basically gives you the context for your planning. And understanding the past in this way is going to give you a good steer as to what you want to repeat in the coming year. Here's where we introduce the idea of a forecast. And so now you've isolated the historical number over many years, and you can use that and forecast forward for the 12 months, and you can plot that on exactly the same graph as I've done here. So now, as you can see, you've got a fourth line, and the first thing you want to do is to eyeball it and just have a look at it and see whether it's similar to the historic lines that you've got. And does this new line for 2024 make sense along with the other ones? Can you explain the differences? So is it a similar shape? And can you explain the peaks and troughs? And then you can start digging into the detail. Is it producing the overall target you want? 5% growth on the previous year. Okay, well, what are we going to do about that? So it's a good point to jump off on a discussion. Is it the shape you want? Do you expect the phasing by quarter to be the same as previous years? Are you looking to change that? Do you want to start to increase sales somehow in the first half of the year? Is that an opportunity? Or actually, do you want to leverage more what's already happening at the back end of the year and increase sales there? So again, gives you a good discussion, a good baseline to discuss that from. And then you might want to include specific plans that you have for the year ahead, specific business initiatives, and how do they map in. They're not going to come out in the forecast unless you tell the forecast about it. So you take this as a baseline. We've decided we want some promotional activity starting in September this year. You'd expect promotional activity to raise September's figures. You can do that to the forecast prior to publishing it to everyone. And this is really where the magic happens. You've got this baseline and you can discuss improving performance. You can use this realistic set of figures based on past performance to really supercharge that.